Welcome everybody to the show. We have a very cool guest, Will, my man from Slow Ventures, also Andy. Of course, welcome, Will.
Hi guys, how you doing?
It will.
How did you get to this podcast, and also how did you get to Slow? And how long have you been there in investing?
All right, that's a lot of questions. I'm not sure I know the answers to all.
Okay, pick one and stick to one of the questions.
I ended up here because we're invested in your new company.
Yeah, that's correct. Yeah.
Oh, so you actually like Kevin? Cool.
Yeah.
I mean, I like his ideas. I'm not sure.
I'm also invested in Kevin's company, so there's something in common.
Maybe we could just make this a thesis diligence investor meeting.
Get back to work, Kevin.
I ended up at Slow. It's almost been 10 years, which is
Yeah, I
great.
saw that.
The Slow guys had been friends from around the city. I mean, we kind of all grew up the same era of San
Yeah.
Francisco. I spent my prior life at a firm called Industry Ventures, which was like a wild ride on a pirate ship until it became the Navy, where we had some crazy and correct ideas about what was happening to the venture capital markets.
Yeah.
I had left to go start, kind of had a theory on doing my own thing. Took a couple of us, we all went out I was out to dinner with a couple of Slow guys saying, hey, I'm going to do X. They go, well, Slow had been kind of their own vehicle with some friends from Facebook that they were investing in Slow Capital.
Right.
And I had kind of this idea to go stand up something on my own, and they were raising outside capital. And there was kind of this realization that they knew everything and everyone I didn't, but vice versa. And there was this real symbiotic relationship between what we'd all been up to and we tried to do together.
That's awesome. And the reason that I wanted to have you on, so our audience is like typically first-time founders.
Right.
And we actually had Alex from 8VC on, and that turned out to be one of our more viewed episodes. So I think that the founders, our audience, outside of listening to founder stories, we've had amazing founders from Aaron Levy from Box, and just, I don't know, lots of other really great, really great people. But I think that and specifically why I wanted you to be on is like, Will, you have really unique takes on venture and also building companies, and I fucking love that. And I don't know if you want to start with that, and also
only ever build venture firms, which is like not nothing. It's pretty funny that I've never had a real job.
Everyone's an armchair quarterback on the internet.
Yeah. Well, that's what investors are. Like we're editors, not authors, Andy.
he was a VC too.
You were a good writer on Twitter.
And he was a VC as well.
Oh, there you go.
16 years ago.
So Will,
Really?
what is your craziest take right now? So like I saw like looking up to this, I saw a few of your like board composition tweets you had, like, don't raise a $30 million seed, like those companies never fucking work out, like for the audience, and also just to shoot the shit between the three of us, like what are some of your like craziest ideas that you kind of like bring to the world? And to be clear, Slow only does seed checks. And so that's, or maybe more, I don't know.
Pre-seed and seed. I mean, I like to talk about as being like in the mix on 0 to 7 of equity into a company. I think when it goes kind of consensus, and teammate Yoni talks really well about legible companies where everyone can kind of read and understand them. We want to be as much capital while it's illegible and makes sense, right? And then everyone else figures it out and it runs away. And we do have a growth fund where we once a year will heavy into something we think is both important and an high quality business.
The mine, I'll nominate myself for that.
Okay. We'll talk offline. I think it's hard to pick. None of them feel crazy to me. So it's like, listen, like one thing I deeply believe is I actually think, so I get in a lot of debates and like, what is venture capital? Right. And people are like, very smart friends are like, well, it doesn't matter. You're too pedantic. It's like, I don't know. I like definitions. Life's short. I'm going to define it the way I like it. I actually think like true early stage classic definitional venture capital might be the most uncompetitive that I've seen it in my 20 years of being around the hoop. Now everyone goes, okay, well, but how do you define it? Right. Like you kind of narrow it down to your own game you want to play. But I think when I talk about venture capital, in my mind, it's a very specific kind of capital that allows founders to go run experiments, right? That are like pretty irrational in the face of it. But if you get a true answer, it's objectively wildly valuable. I think another way to talk about it is like, does this work versus does it work at 10x scale? And it's, I think when you define it that way, or another definition for me that I use with founders is like, I want to line up 4 things and push them over with money. The first is a truly novel hypothesis on how the world works, how you're going to create value. I spend a lot of time thinking about value proposition, not shockingly, because you got to go create some value and then capture it and then turn it into free cash flow. And then the capitalist cycle works. So it's, do you have a truly novel hypothesis? Can you get a yes or no answer, right? Is it an art project where value is in the eye of the beholder, or is it something that we can really like figure out you are correct on your thesis? Secondly, we don't have that much money, and the whole goal of venture is like a little bit of money for a lot of bit of value. So like, can you run the experiment relatively inexpensively? And then ultimately, if it is a true answer, like objectively more valuable, could you take it to any sane investor that may not be their strategy, they may not do it, but explain what you proved, and they go, yeah, that's a lot. That's like valuable. And so I think we're looking to use money to knock those, or at least I am, use money to knock those 3 dominoes down, or kind of that chain reaction get going. That's how you get markups on the capital you put to work. And then great companies have 4 or 5, any number of those, right? Kind of over the life of a company, have those equations to run. And that's how you end up with what you really see is an oscillating S curve, right? Over a really big, important company's life, the derivative of which is a hockey stick on value. So like, I think that's kind of how I look at and define venture. And when you do that, it is not terribly crowded, right? To be that capital in that way.
Fair statement. I mean, so you allowing people to run experiments versus having the go-to-market proven out at the seed stage is very differentiated these days.
Yeah. I mean, that, and that's how you like get the returns. I think the other context is like, I grew up, there's history to venture. I grew up around here. I mean, it's long dated. Venture is not something that like got invented in the last 8 years. This is how it was used classically for most of its history outside of like a very short period. This was, hey, I'm at Stanford as a PhD and I have a crazy idea about how to run electricity through circuits to increase computer, make it way cheaper. You know what I mean? It's like, great. You're like, let's diligence that experiment. If you're right, is it worth money?
Right. Yeah.
I mean, my joke is everything should look like a semiconductor company. I don't really mean that, but from a ideological purity of the equation, it's pretty great.
So how many biotech investments have you done lately, Will?
I don't have the grades to do biotech investing, dude. I would honestly love to do biotech. The issue with biotech, and this is like this might get too wonky and lose founders, but the cool part about biotech actually, like in a vacuum, doesn't create any value. It fails my test because like it doesn't create objective value for a very
cancer isn't objective value.
Well, we're talking about money here.
It's not like, what's the value of curing cancer?
2 billion top line revenue, 5 billion top line revenue at a 20x multiple.
Treating for
fair.
No, but the idea is it does eventually, right? But the way the capital markets function is like, I take some money, I productively put it to use and create some value. I sell you some more of my company at a higher price so I can go experiment on new things, right? And it's this, again, in a vacuum, it's this hem and haw of like, oh, commercial milestones, more money, commercial milestones. And the really cool thing the biotech sector did that I think a couple others need to figure out is because I think I've tried to push people on getting the right history here, but they basically created value on non-commercial milestones, which is like, cool, phase 1, what I can really do with it. I can't sell it. There's not revenue, but hey, I've got a platform, right? I've got a distribution platform. I got a phase 2 and phase 3 infrastructure. a slightly move forward asset has value. And what became really cool about that is you ended up with like objectively commercial milestones for capital formation that would allow you to sink $2 billion through a phase 3 trial to try to bring something that does cure. And so I guess that's how my brain works. But like I look at somewhere like, I don't know, other places we need transformative breakthroughs, right? When they don't have incremental commercial milestones, it's like, can we invent them? For years, I've been like, can we have the equivalent of a biotech platform for clean tech? You know what I mean? Where it's like, the science works. Does that have market value where someone could buy it? Because if it has market value, then it has capital formation value, and we can go do some bigger, more dramatic things.
Yep.
Talk to me about the companies that have raised a ton of money early on, and the ones that haven't, and kind of what you originally said as far as like you look for some of the companies that haven't really like kind of anti like consensus views, and how those actual like uh actual for you as a VC, like how those returns have come back. Basically, what I'm trying to say is the 30 to $100 million seed round companies, do they ever fucking work out from like your perspective as a VC?
I can't quickly pull the history, right? From my brain being around it for a while and go like, oh yeah, that's the company who, and again, it needs a bunch of caveats, right? So like
Yeah.
SpaceX was 100 million of Elon's money, you know what I mean? And then
Right. Right.
just
Right.
out of community, he didn't just like put it all on the balance sheet. He kept funding it as they went through milestones and had capital needs.
True.
Palantir was 30 million of Peter Thiel.
What?
Palantir was 30 million from Peter Thiel.
Yeah, but also done more incrementally, right? So I think the couple caveats is like, how truly pre-experimentation is it or not? You know what I
Right.
mean? Um, What is minimum viable to run the experiment, right? And then is the payout from that first experiment. So like those are all my caveats on like getting to the right number. I just can't pull from history anything really. I mean, anything dramatically where it was like institutional capital formation pre-experiment at 10, 20, 30 billion bucks.
Are there any rules that you guys
Andrew?
have? Yeah, Andrew as well. Are there any rules that you guys have within the firm? Like Slow has been like an outperformer, I think, of funds, especially in the C stage. Are there any rules that you guys have as partners that you just like, you're like, we won't participate in this much capital at this stage, like they haven't proven this thesis out, or are you guys just kind of more like we think this is going to create an outsized return, and we're kind of we're in it. It seems like from both Will, you are outspoken on Twitter, and also Sam is very outspoken on Twitter with one of the other partners, about like investing like in the really early stage companies that don't have a lot of options, that are maybe a lot of counterintuitive to a lot of other VCs. How do you guys think about that as like rules of like actually writing checks?
I mean, I think rule number one is like, we try not to be dogmatic about much. You know what I mean? I think there's like some core principle questions we like to have answered. So like, never say never. That said,
Right.
our business model only works if we're not bidding with 10 other people. You know what I mean? For ideas that everybody can understand and fund in large amounts, because we have a small fund that needs to be super equity efficient in how it outperforms.
Would you guys have, now using the Andrew example, would you have participated? I don't know if you guys have. Would you have participated in that seed investment?
I mean, if you told me it was going to be Andrew, sure.
You just need to invent the hot tub time machine.
Yeah. I mean, it is interesting because I honestly don't know the specifics of exact. I don't think it was nearly as much one shot. I mean, it gets blurred with the founding situation and coming out of founders. You know what I mean? Of like
Yeah.
how the capital went in against experiments, and was it incremental or gated versus milestones, or did really they just put 30 million bucks in a bank account and say, call us back when you have evidence that you're correct?
Right.
I don't know. But I think that's how my brain works, right? It's like, cool, Kevin, you want X amount of money. Like, why is that what you need to prove, right? I guess it's this idea that
Yeah.
the value isn't going to climb in a linear fashion. You're going to break through.
Right.
when you get true answer. I mean, there's kind of two places value goes interesting slow. The most is this is true for the first time,
Right.
right? And the second is I've now done enough and then I can rely that it's true, which is then it kind of peters off and you get credit for it. And so
Yeah.
I think the question for us is just always like, for me, I won't speak for everyone because we've all run our own flavors of doing it, but
Yeah.
what is the experiment? Why is this the money you need to run it, right? To a place where nobody can argue with the results.
Right. Talk to us about some of your portfolio companies that you've seen that have particularly raised small amounts of capital and turned that into something really large, and maybe how like a lean team can, like, I'm a big believer, lean team, small amount of capital, prove your milestones. Talk to us about some of the examples. Obviously, one of your famous examples is Solana. I know you guys were one of the first investors in that, and I'm sure you have a number of other ones. But for the founders listening, like, give us some examples of kind of like taking small amounts of capital. Don't try to raise that huge fucking round, and how that actually can benefit a company.
Yeah, I get one. I just want to be that caveat, like you got to run the experiment, you got to run. You know what I mean? And that
Yeah.
takes a certain amount of resources. And so honestly, I spend a lot of my time these days pre-idea with really high quality founders running something I call slow PhD, which is can be a whole nother conversation. But a lot of it is like working what you're going to work on. Just be honest with yourself about the resources you need to
Right.
get to a yes answer, what that costs and what the value of a yes answer is, and make sure for you as a founder, the biggest asset going into any company is your guys' opportunity cost. Right. And so just make, I really, if I do one thing right in my career, it's like being being the beacon of light going, this is your opportunity cost.
Yeah.
You're making a concentrated investment in the world's most volatile asset class, probably. Do you have like a real understanding of risk rewards and payments? So like that's one thing. That said, I mean, I look at something like team shares is probably the easy one where we did it. I mean, all kind of basically on our own early. And
Right.
there was a very simple experiment to be run of like, can we, can we actually build the product that allows us to drop the cost of transitioning a business that we buy to employees by an order of magnitude? Didn't take a big team. So again, I think it's reducing the experiment to like the smallest and most high signal, high value, easiest to run thing you can prove to yourself,
Yeah.
and then going from there. And so I would, it's almost like another way to frame it is what can you do? What's the simplest thing you could do that would tell you to stop working? You know what I
Right.
mean? Like that's
Right.
almost the way to find the high, like what's the leanest amount of people you can go and run an experiment where if you got a false, if you got a no answer, you, Kevin, you, Andy would feel totally fine packing up the tent and going. And so I think that's the other way to think about how do you get to that minimum viable number to start doing some meaningful things on the chain reaction.
Yeah, I want to ask actually, Andy, kind of the same type of question, but in a different way, in a founder's perspective. Like, I totally hear you, Will, but the other side of it, I would say that you don't typically know like how much capital you actually need, and so like when VCs are willing to give you that 5 million, $10 million seed check, you're like, oh, this will give me a lot of time, and I'm going to hire amazing people, and I'm going to be able to prove that out. Where in reality, you may only need two or like, well, from your side and the VC side, you're like, yeah, this only needs $2 or $3 million.
But
Andy, like you've raised a lot of money for your companies. Like, how do you think about that? And also, you've been a previous VC before, so like, how do you kind of like raise as much as you can for every single round, but like also like raise as less as you can for dilution, but also attract like the wills of the worlds and the slows of the worlds that are like trying to actually make a return on all those things.
Well, I actually agree a lot in Will. I think at the end of the day, you're trying, for me, I'm probably a little bit more financially oriented than most. I actually sit there and say, okay, if I want to build this, how long is it going to take? How many engineers? At what time period? And I sit to try to raise the amount of money that I'm going to be able to prove that this works and
Hmm.
then get to the next milestone. So I actually back into it. I think if more founders did that, um, they would actually be in a much better place. And then obviously you want to pad it. You want an extra. So, I mean, if you need 3 million to hire 5 engineers and operate for 18 months, you probably want an extra 6 months because, and it's the first time founder or something's going to go wrong
Yeah.
and something's
Yeah.
going to change along the way. And you're going to need that extra 6 to 12 months of capital. I've never been in a company that doesn't need it. I mean, sorry, I've been in one that got very profitable very early and never needed that extra million. But everyone always needs it. Everyone always needs more. Things take longer and they are harder than people ever expect, and they take more capital 99% of the time. But everything Will said is correct in how I think about it.
Well, it's okay. That's why I want to go back and push. I think one of the
Yeah.
big problems is like, hey, it's unknowable, right? There's this general sense from the early stage that it's an artistic walk around in the woods and everything is unknowable. There are infinite possibilities. The answer is there's actually a lot that's, yes. Is there a magic? Is there magic involved? 100%. But that magic is like pretty sandboxed around a lot of knowable things.
Right.
And I think that's one of the big things that I don't know, that I don't know how loud or my voice is, but then I want to get on the world. It's like, no, this stuff is like lots knowable. You know what I mean? Like once we start talking about solving a problem with a product, we can actually get a pretty good concept of the value proposition, right? Once you have value proposition, we can figure out capture dynamics, margin dynamics, business model. This is not the random walk is like, how is the world going to work in 15 years? And why do you follow the rate of change? And what are you catalyst for on rate of change?
Right.
Westman's very noble. And to the point, what I tell folks is like, go do the math. It's not going to take infinity days to go, I want to prove X. I need Y resources to run the experiment and then add 20%. And then let's figure out what the value of the story on the other side. Let's say you're right. We can put some guardrails around what that is objectively worth if you're correct and start seeing if that trade-off, again, works for the founder and their opportunity cost. The point at which we're getting involved in our fund size, we're pretty aligned with the founder. So if we can make sure that they're really excited and clear-eyed about how they're investing their own opportunity costs, it's like mutually beneficial.
Yeah, and I think like said it slightly differently. I mean, if you just think about what you can build and how long it takes, you have 5 engineers, product manager, a designer, and a 3-person go-to-market team, and yourself, that's like 11 people roughly, plus or minus. It's like 2.2 million bucks a year or 200K a year, and that's high salaries or market salaries. And so 4.4 plus a number of million to give you some buffer, you can build a lot.
Well, and then you factor in, hey, it's going to take us 6 months to get ramped as a team. So I need 6 months of lower burn. And then I'm going to need to release the product and probably need at least 4 quarters, right? Once it's in customers' hands to actually get statistically relevant feedback on the value proposition.
Probably get to $1 million of ARR these days.
I mean, what ARR is the output of something being true. It should not be an input for an analysis. It tells you something important is true. But like in 1.5 minutes, we just pretty well sandbox. You know what I mean? And ideally, you're backing someone who has a good sense of the resources they need. You know what I mean? If they're like, I don't know how many engineers it's going to take. It's like, okay, well, let's zoom out for a second and be like, maybe that's something we should figure out before we go.
I'm not raising, but I'm available, Will.
And you're always raising for something, by the way. So you're always doing something on the side. Well, that actually kind of leads into my next question. So like you obviously you want to have people that actually understand like what it would take to like have a yes or no on this experiment, meaning resources and all that. Like, what do you think about investing in first time founders that like literally have that are our audience that like, and I could talk as a former first time founder that literally have no fucking idea what we're doing, how much things are going to cost, what is important, what to focus on, all of this stuff. We have a crazy idea and it may or may not take off. Do you like to invest in those founders or do you like to? No, you don't. Interesting.
Nope.
Like no dogma. I'm happy to, and I love talking to them, but like think through the math, like just do the fake math of like, what would make me want to take that risk reward trip?
Hey, I'm with you.
Like a plan. of like what we're going to build and how long, what's it going to
So,
take? Like roughly, like I know you're going to get it wrong.
so like
Like,
here's my boring take, right? Which is like, so it's no secret. I love Charlie Munger. It's like my North Star. Right?
Yeah.
He just makes a lot of sense, and I think it's as applicable. His takes are as applicable to like anyone's life, including a venture capitalist. But one of the things on this front, I have two responses to that question. One is like, your most important job as a founder, who is the CEO, is to be a better investor of time and money in your own company than I am. That that's fundamentally what I'm trusting you. Like, you give me a general thesis, I give you dollars, and you go invest that so that we
Yeah.
create. I think there's two parables out. Giving that to people who don't understand that at all, or aren't open to like learning that, or don't show a disposition to be like someone who could generate alpha, doesn't make a lot of intuitive sense to
Right.
me.
Right.
And so I think that's kind of how one way I approach like you. And I think interestingly, over the history of fund management allocation business, people have to like learn how to run a $10 million fund, to run 100, to run, you know what I mean? There are like,
Right.
not only are there like in a company specific uses for the experiments as they get bigger, but there's also the skill of learning to manage a different quantum of financial and human capital that I don't think you can force and break. I think you need to run through those gates pretty naturally and demonstrate the ability to do it well before move on. That said, like, I think this isn't universal, but there's kind of four ways to think about a founder, right? It's like, what's the level of depth and breadth they have in the category they're going after? I may have a crazy idea in semiconductors. The odds that I'm correct are like 1 in a billion because I've never studied it.
Yeah.
I mean, but if I give you an idea in venture that's novel, maybe I'm 1 in 20 because I've spent a lot of time around. I believe that. I know people come in from the side and break industry norms. Those people are usually, one, like, you can verify how smart they are. Two, they spend a lot of time studying before they get going in those industries. So I think
Yeah.
there's depth and breadth question. Um, there's an ability to play by the consensus rules, but also shun them. The classic, like, get into Harvard, but then not care you're there. And so I think that's like another, right? Because in order to scale a company and be really right, you're going to have to play by some norms at some point and show that you can play other people's games. But I think if you're fundamentally that kind of person at your core, operating from a startup stage is really hard. Then there is I think this idea of like hired, fired, managed, led, right?
Right.
Like, which is this ability to deal with allocation theory, both on human capital specifically. And then the final part of like, are you comfortable with the volatility of a startup roller coaster? So
Right.
if you want to like
Right.
go through the four things, if you're deficient on a couple of those, you just better be 2 or 3 standard deviations on another one. You know what I mean? It's almost like you can view it as
Right.
like
Right.
a square that should. So if you are a first time founder who like self-identifies that you don't spike well, right, on a couple of those, like, I'd have a real internal gut check of like, am I 2 or 3 deviations away from other high quality folks in one of those areas?
Right. Give me some dirt or just some VC thinking. So this is my third venture startup. My first two, well, I sold both of them, but for pennies. And Slow was actually an investor in my first venture startup, Shyp. And I reached back out to you guys. Obviously, I lost all of your money. Sorry about that. And I reached out to you for my latest venture, and you guys were actually one of the few people that so about half of the capital came from existing investors, but the rest of the half came from other people, and other people just like totally shunned me out at all because like I'm a failed founder and all of this. But the way that I look
I
at it
gave you
is,
money.
I know you did, and I lost your money before. But I think that there's like an emotional like part of it. Even my largest investors, like there's some people that literally still will not talk to me because I lost their money. Like I'm literally as a founder putting like the odds of me succeeding versus you as the VC are much lower. Like I'm putting 100% of everything I have into this. Talk to me about like that emotional piece that a lot of VCs probably get wrong, and how you guys or how you think of it
I don't
coming into me losing you guys' money.
What'd you say?
Coming into my third company as like a 2-time venture failure.
Thanks, Kevin. You don't have to be so hard on
Yeah,
yourself.
man. It's okay.
I
Like,
am.
step
I'm
your
a
game.
realist.
These are just facts. And then this is one, like, right and wrong is silly. It would be like, so people are going to have whatever reaction they have. I think my point of view is like, at the end of the day, it's just money. You know what I mean? Like and that may be just like a very privileged, it is a privileged point of view. I think getting too emotional about this stuff, I don't know that very many consistently outperforming investors get wildly emotional about their investments. Right. So
I'd
I
say
think
30%. I'd say 30% too.
of the wildly successful ones.
Of just investors in general.
Well, yeah, but like, I'm not trying, so like, right. I'm trying to
Yeah, I get you.
emulate. So it's like,
Yes.
I think really great investors are pretty non-emotional and rational about how they approach things. I think if you go into this game thinking and getting mad at every loss, it's like an impossible game to play. This is a,
Agreed.
this is a luck-based endeavor, right? Inherently, and there are probabilities involved. And sometimes you can make all the right reads at the poker table or the blackjack table, and the cards don't go your way. That's like inherently the game. And so I think that's like one approach, or at least the approach I take. I get really, really focused on like why it failed,
Mhm.
right? Like I always say, like, we really want to lose money because a very thoughtful thesis that had like the right risk reward payout just was false. So I think, where does it get gray working with founders? It's like, well, did they run a clean experiment? You know what I mean? How efficient were you
Mhm.
in
Mhm.
patient capital? Did you run a clean experiment and get real signal? You know what I mean? And then it
Right.
goes down to like, did you just do some fraudulent stuff? I mean,
Yeah, that's fact.
it's
You
fine.
you can't do that.
You don't do that. So, but I think our approach is like, I think you had good theses that are at least theses we thought were good. And we had to bear some responsibility in it for hearing you out and going, that is a thesis worth experimenting, right? 'Cause
Yeah.
it's true, it'll pay out. And it turns out it wasn't true. You know what I mean? Like the entire equation, like, didn't work. And so I think that for me, it removes some of the emotion from it. And then it
Right.
gets every time I run through the same calculus of like, does Kevin have a reason? How is Kevin telling me the world will work in 15 years? Does he have higher odds than normal of knowing that? Right? Is he thoughtful about the chain, like dot, 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 right? In managing human capital and like just restoring.
Right. And the answer was
Did he learn
yes.
some lessons also along the way?
Well, yeah, I mean, that make him better in one of those 4 buckets. You know what I mean? That like make him better at navigating the volatility, managing human capital and financial capital, da, 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 da. And so, and to be candid for all the listeners, like, we didn't go all in with a core check. Like we had
No,
questions with you that I think were
I
like
know.
be fun watching be answered. And so I think that's like another level is like the quantum of capital. We like love the vision of the future, had some questions about the economics and who captures them.
Yeah.
And it's like, great. Then that you can use the quantum of capital as a lever for kind of getting into the equation.
Which you guys are coming in with the core check. I heard somebody say that. But yeah, that's just through the rumor mill. Anyways, that's not
That's why you're really on here, Will.
yeah, that's this is
Oh,
this is a pitch in front of tens of thousands of people that you have to say yes. Um, I'd love to hear some other stories of you mentioned one portfolio company. What are some like crazy rides you've been on, like as a VC?
man, they're not that crazy for me because I have an entire portfolio and I run the totally different business.
Yeah,
So
but you hear the stories, right? You hear the actual like, and you can only imagine like what's happening internally in the company and all this, and like company is gonna go like we obviously like I know me and Andy like I've been like within a month of running out of money multiple times.
that's like not, but to me, that's like not crazy. That's just like happens.
No, so I'm asking for the crazy stuff. I want the real crazy
Well,
stuff.
I can't think of
I want the
it.
fraud. I
Also,
want I
like,
want I want the what like the real crazy stuff.
I mean, the real crazy stuff is fraud. You're like, oh my God, I can't believe you actually someone that's out of my office went and did something that's just like blatantly
So
illegal.
so talk about so that's a little bit covered in the press, but I think that that's only a certain percent of it is actually comes to light because even as a VC, you don't want that stuff to come out publicly and you to be associated with that. What percentage or give some examples and don't name names or something like that, but you like what do like the craziest founders do? They just make up numbers and or are they having private jets or like what's
Say it's like
happening?
less than of all the 1% fraud. You know what I
Okay,
mean?
that's pretty low.
In the margin of error, and I don't think, knock on wood, it's been on a quantum of capital. And to absolve us a little bit, like we're not on the board at these points or whatever. But
Yeah,
I think yeah, I mean, the craziest is to make up the numbers, right? Like I'm just going
yeah,
to stuff and
yeah,
accept is really crazy. I think there's some other stuff where you can more understand how they got there, right? Which I mean, within the healthcare space, coding things like pushing the envelopes on reimbursements, where it's kind of like, oh, and then I'm not excusing the behavior, but I can kind of understand the logic
right.
that got them there.
It's
But
like when you make up all that extra revenue where it's actual fraud, where it's like, how did you get here? And then you fake the audit.
the founders like designing PDF templates to make up bank balances.
Yep.
And
Wonder where you find that person. That feels like an Upwork type of skill. Like, you go to your core designers for that.
And so, I mean, those are the ones where you're just like that I guess if crazy is like, it just doesn't make any sense that I can deduce at all. I think those are the situations. And they're rare. I mean, we joke that like, it's kind of good in venture that like the amount of dollars at early stage venture on a capitalism scale isn't that much. So like
Yeah,
varsity fraud team goes to Florida and works on like Medicare scams so they can get hundreds. The people scamming single digit millions aren't that good. So they usually get figured out.
right, right.
It's really hard to cheat at revenue at the seed stage when you don't have any revenue.
Yeah. 100%.
Right. It's the easiest round race.
Yeah.
I'm curious, as both Andy and Will, both you as VCs and Andy, you obviously as a founder. I don't know. I feel like there's I don't know exactly the question to ask here, but like there's got to be some things that you guys like disagree on that it'd be great to kind of pull out of you.
Operating this job.
Well, but I'm trying to actually, 'cause, I tried to
What
do
if
that at
Will
the
is just
beginning.
really smart and so
No,
am I,
I
and we
tried to do
both
that
just
at the
happen to be
beginning.
right? Like,
I
you
did that
agreed with him.
I did that at the beginning, and then Andy, you're like, "I agree with this." I'm like, "What the fuck?"
Sorry, we just happen to have the right answer.
When things are principled and logical, like smart people are going to come to the same place on.
Okay,
You also you talked about emotion in investing. I also agree with that. Like that's behavior finance 101 and why you can, I mean, like I have a degree in this.
He has better grades than me, it turns out.
Dang, so
okay. What makes I'll go off one of your recent tweets, Will. What
Okay.
makes the best board? And then to you, Andy.
Oh, this one's easy. One, not that many investors. No, I like my take on a board is it basically should function as your invest. There's two functional jobs. Is like, are you going to run out of gas before all the cool experiments are run and this thing is like independent, right? Which gets into projections right away, but that's pretty simple. And then like, it's basically your investment committee, right? We made a decision to allocate resources this way. How is it going? Should we continue to allocate them? And are there net new allocation decisions? And so I look at the board of like, how would you compose a board, right? To help a founder have the best context possible to make those decisions without having a bunch of overlapping competencies. And so in my mind, it's the founder. I think you
Mhm.
need someone whose job is financial capital, right? Raising it, allocating it,
Mhm.
staying on top of it, doing that well. Someone whose expertise is human capital, recruiting it, retaining it, managing it out, ... Someone who understands the numbers, right? And can kind of watch what is happening from an FP&A standpoint. So a former CFO, et cetera, someone who understands that we're getting the right reporting back on our experiments. And then I think ideally someone with a ton of industry context right? For how the market works, the players, the dynamics at play in any given
Hmm.
ecosystem. I think beyond that, it's hard for me to think of how you don't add people, right, who don't end up being duplicative in some way. And smart people can, I mean, there are a lot of ways it's going to, that's just is like the most logical composition I can think of where you have enough voices in the room, right, to kind of cover your bases, no overlapping competencies, and the CEO has the support and skills they need to make increasingly sharper allocation decisions.
Andy, what do you got?
I think boards
Don't
should be
disagree.
small with good founders who are experienced. Boards should be small. Boards are there to inform. I I generally agree with most of the
Oh
functions
God,
that Will specced out. And
fuck
like
off, Andy.
maybe my nuance is I think actually boards should be smaller in most of these companies
Yeah,
outside
that's
of
true.
going public. I mean, the job of a board is to support the founder, to guide the company, to provide additional context on the industry. But like, you don't need a 10-person board to do that. If anything, like board meetings are once a quarter to get advice on the plan the founder puts forward and
Yeah.
to get feedback on it. But the founder is the CEO and they're making the recommendations. And with a good founder, those should be sound.
I
And
think
they
that
should be small. Like a big board slows you down.
it totally does, and it just makes more work for the CEO and the executive team and all that stuff. And board meetings, especially as you get into the later stages, just become like a 1 to 2 week exercise that you're just focused on, that you're taken away from the company, which is not good for anything, for anybody. And so my kind of take on it is I would actually love I think that there's people on so for one, there's personalities that get involved in boards. So I've had very large boards that have had very big personalities. And like I'll just call out one, John Doerr, the legendary John Doerr. Everybody would literally take and obviously he's on whatever at that time, 12 different boards, and he's on Google's board and all these different things. And so like we're a very small allocation of his time and his brain power. And all of a sudden he looks at one slide and he's like, well, you need to be focused on this. And he's trying to, like, he literally thinks that is what we should be doing. But all of a sudden, everybody is like taking it. It's like, oh my God, this is a legendary John Doerr. He did all of this amazing stuff. But like, he's not even fully thinking about what that statement does and like how that weight carries over to everybody else. So I think that you have to have the right personalities in the room. I think that you need to have people that are for the company, which is kind of hard to do with when you have investors and then you have investors that co-invest and that are also trying to be better than the other investors. And you have this like weird kind of dynamic. So I think that loading it up with founders is really smart if you can, that are literally like if I was on a board, I don't take board seats. I would call you out, like, and if I was on your board, I'd call you out on like this should be growing faster. Like you're not growing faster enough, and like not in the spirit of like you're not doing a good enough job, but like we need as a company to actually do this versus like, oh, I need to co-invest with this person, this and this weird kind of like investor piece. I do totally agree with Will, your thesis of like less investors and less like more independence. But like how can you ever get to that given that like somebody that writes you like a big check comes the board seat? Like, is that possible? I don't think it is.
Who's that too? Me or Andy?
That's you, Will.
That's you, Will.
Like, why not?
If you are, I don't know, you're call yourself you're Mark Andreessen and you are writing a Series B check into I don't know, OpenAI or something like that. Like you're joining the fucking board.
Well,
But
why?
you what's that?
Why?
Well, but that is the norm.
Not
Okay.
depends on who.
I mean,
Can't get away from that. So I understand your ideal board, and also like I think we're all aligned on that. But like, how to the people
Can't you just
listening,
say
how do you actually construct a board like that?
Could you just say no?
No, you can't because it
Well,
comes with a board seat. There's literally no Series A or Series B or C. Maybe C and D don't come with a board seat, but Series A for sure is taking a board seat. Series B is for sure taking a board seat.
I've seen in good deals with good founders who are very skilled operators, the founder push back and say, "No, I don't want you on the board. You can take a non-voting board
Very rare.
observer."
I
Again,
never see this.
I mean, you've got Lightspeed versus Andreessen versus Kotu for your Series B. You have no leverage on that.
Not usually with a board
They're
seat.
all they're,
No.
they're all going to walk without a board seat.
Yeah, typically, yes. They'll fight over valuation. Absolutely, yes. But
Okay.
they will
Okay.
not on. You tell me. Well, you see these companies that are.
Great kind of fact because everyone subscribes to your logic.
Yeah. Look. I don't personally get it. I'd love to kind of be able to form this magical board that we all speak of, but I've literally never seen it in practice.
I don't disagree, but like it doesn't mean it's like structurally and physically impossible.
That's true. All right. So for
I am an investor with multi-time founders in a company. The seed has no board seat. The A has a board seat. The B may or may not have a board seat. They've raised around 60 million in capital. I don't want to give enough metrics away, but it's a 4-person board, 2 founders, one or 2 investors at the Series B, greater than at like a Series C stage company.
all right, well, I guess the lesson here is for everybody listening, like this is a point of negotiation with like get more people involved, obviously, to compete for your Series A or B or whatever, and just make this like you're not going to get a board seat.
Listen, I'll stop taking like the intellectual Professor Will take on this, which is
Okay,
like
thank you.
what I've been
Thank you.
what I've been accused of. But like, I don't know why I wouldn't just stay that way, but to take that off at a minimum, I think there's a conversation of why. Great, we've got a board. We've made it to the point where we're raising a Series B, which rarely is there one term sheet at a Series B in this world, right? Everyone clusters around a mean. It's a legible company. Everyone agrees. They may disagree on price, but rarely is there one offer for capital at that stage.
Yeah,
Just explain what you're trying to accomplish at a board and try to understand why adding a +1 venture investor to the board accomplishes that mission.
agreed. Yeah.
The answer is, I mean, then it becomes kind of self-evident. The answer is great. You're like, oh, this is a way to get there.
Yeah.
Right? Where I have the right circle of competencies around me to make increasingly better allocation decisions, right? Without sacrificing necessary speed.
Yeah.
And if the answer is weak, like all weak answers, it'll kind of be obvious to itself. And that's like a different discussion then.
Right. Last question, because we're going to wrap up here for you, Will. You guys have been early. I don't know why your name is slow because you guys seem to be pretty fast at spotting trends. You guys have been early in a lot of trends, including crypto. I know that was like one of your biggest wins. For all the first time founders here that are thinking about starting a new company or are currently running, are there any sectors that you're especially interested in or think people should be building against right now?
We're pretty, it's not our job to figure out what you guys are going to go build. You guys, again, as I said at the beginning, like we're just the editors of the future, not the authors. So we try to stay away from being too prescriptive because if I knew that, I could get 10x the payday if I go start the company. Um,
Give me a
um,
real answer here. Are you are you investing right now? Are you investing in AI agents? Are you
I mean,
investing in LLMs? Are
we're
you
very
like
publicly leaned out or not proactively investing in pure AI. I think that like for 3 reasons, which
yes.
is it's kind of like being an internet company. We think it's going to end up being pervasive. Um, I'm not sure it disrupts the incumbent economics that dramatically versus enhances them. So that's like a hard equation for us to figure out, let alone
Yeah.
people doing it in a proprietary way with really good economics. And I think the pockets of AI just require that do line up for a classic investment just require large chip stacks. Like we're not chasing that down like everybody else because we have a fundamentally different business. Um, we're open, man. I mean, like we operate across a range of industries. I think we're probably a little more thoughtful right now about how software I guess one of my taglines is software eating the world shouldn't mean more software companies. So I think I'm
Sure.
super interested in people that know how to write code and IP that transforms economics, but are open-minded, like, to the best business model, presentation, expression of that. So that's probably like maybe one of the differentiator things that we'll take a meeting with anyone. I mean, it's this idea that like a lot of vertical SaaS did transform the economics, but capturing that value for founders and shareholders was really hard to non-existent. Is there a better way to, is there a better mousetrap, right? For that is probably one place
Right.
we spent a lot of time. I think thematically, where I'm super curious to see, I just can't see a world in 15 years where there aren't a lot more private practices in medicine. My wife's a physician. We spent a lot of time investing in healthcare services. Like, tough to envision a world where we don't have more physician autonomy in economics and own practices. So we're curious to see things there, but we're open for business for good novel hypotheses that you can run pretty efficiently for a lot of value.
Got it. Well, let's end the podcast there. Will, how do founders spam your inbox if you want it?
Twitter's probably the easiest.
Okay. Hit him up on Twitter. Thank you so much, Will. Andy, always a pleasure. Thanks for
Great.
listening. See you
Nice
next,
meeting you,
guys,
Will.
everybody. Thanks for listening. Bye.